Welcome to our explainer. Today, we're going to track the shockwaves from one single flashpoint in the Middle East as they ripple out and shake the entire global economy. We're going to uncover the chaos, the really strange anomalies, and the massive strategic pivots from the world's biggest players.
I know, it sounds like a real stretch, doesn't it? But stick with me here, because by the end of this, you're going to see the invisible threads connecting a military standoff in the world's most critical energy choke point to the very infrastructure that powers the AI revolution. Let's start connecting the dots.
Okay, let's dive right in. It all kicks off in the Strait of Hormuz with a super high-stakes game of chicken. The U.S. laid down an ultimatum. Either Iran reopens the strait or its energy infrastructure faces destruction. The entire world just held its breath, and then a delay.
So, the official story coming out of the White House was all about de-escalation. President Trump announced a 5-day pause on the military threat, and he cited what he called very positive and productive talks. It really seemed like everyone could breathe a collective sigh of relief.
But this is where it gets really interesting. While Washington is talking about progress, Tehran flatly denies any direct negotiations are happening at all. They called the claims fake news and, get this, a psychological operation designed specifically to keep Wall Street from panicking. And that's our central theme right there: deep, strategic ambiguity.
So, while the diplomats are sending completely mixed signals, the military reality on the ground, well, that's crystal clear. Thousands of American troops are pouring into the Gulf, the USS AAA assault ship is on its way, and that new deadline is ticking.
Okay, so let's see how all this uncertainty is playing out in the financial markets. We are seeing absolutely wild, schizophrenic price swings, and, maybe more disturbing, some extremely suspicious activity. $580 million. That's the staggering value of a single perfectly timed trade that has raised massive red flags about potential insider trading right at the heart of this crisis.
And here's why regulators are so worried. In one single minute, over $500 million in futures contracts were traded, all betting that oil prices were about to fall. Just 15 minutes later, bam! Trump's post hits Truth Social announcing the delay, and prices just crater. The timing is, well, it's a little too perfect, isn't it?
So this trader, or maybe a whole group of them, played the market perfectly. They rode the price of Brent crude all the way from $112 down to $93 in minutes. And then, when Iran denied the talks, sending the price bouncing right back up to $103, they were already out of the trade with astronomical profits.
Now this is where it gets even stranger. I mean, in a world that feels like it's on fire, you'd expect investors to be piling into gold, right? It's the ultimate safe haven asset. But instead it's collapsing. It's wiped out all of its gains for the entire year. So what on earth is going on?
So gold isn't falling because the world suddenly feels safe. No, it's falling because of some really brutal financial mechanics. You've got the Fed's high interest rates making government bonds look way more attractive. We've seen a massive 62-ton exodus from gold ETFs. On top of that, funds are getting hit with margin calls, so they're forced to sell their gold to cover losses elsewhere. And to cap it all off, countries like Turkey are getting ready to dump their physical gold reserves just to save their own currencies from the crushing cost of energy.
You know, this market shock isn't hitting everyone the same way. Not even close. In fact, it's cracking the global economy in two, creating a really clear divide between winners and losers, and exposing what some analysts are now calling the American exception.
Just look at the numbers here. Since this whole crisis began, the S&P 500 is down, sure, but it's a manageable 4%. But now look at Europe and Japan. Both are heavily reliant on imported energy. Their main indexes have been absolutely hammered, down 9 and 12%. The U.S. is weathering this storm way, way better.
And there are really three core reasons for this. First, unlike the oil crisis in the 70s, the U.S. is now the world's top oil producer, so it actually benefits from high prices. Second, in a crisis, all that global capital floods into the safety of the U.S. dollar. And finally, you have the sheer dominance of big tech and their insane cash flows, which are basically masking a lot of weakness in the rest of the economy.
So how are the smartest corporations in the world reacting to this new reality of stagflation and geopolitical risk? Well, they're not just sitting back and taking it. We are witnessing a great strategic repositioning, and believe me, some of the moves are truly radical.
Let's start with tech, because there's a quiet earthquake underway. It's a bold statement, I know, but the evidence is mounting. These new autonomous AI agents aren't just a cool new feature, they are a direct threat to the entire traditional software business model. The logic here is simple, but it's brutal.
For decades, companies like Salesforce and Adobe made their money by charging you per employee or per seat. But what happens when one autonomous AI agent can do the work of 10 people? Well, the company just cancels 9 of those software licenses. For the giants of software as a service, this is an existential threat to their whole revenue model.
And here it is. This is the direct link back to that question we asked at the very beginning. Big Energy is making a huge pivot. Total Energy's just abandoned major offshore wind projects in the US. So where is all that money going? Straight into funding massive natural gas facilities. And why? Because the data centers that train and run AI consume a monstrous amount of power, and they need it 24/7. Something wind can't promise, but natural gas can. The crisis in Hormuz just put this pivot into overdrive.
The final strategy we're seeing is maybe the most telling one of all. It comes from some of the smartest money on the planet, people like John Elkann at Exor. They've built up a €3.5 billion war chest, and they are choosing to do absolutely nothing with it. For now.
This is what's known in finance as dry powder. Now, holding this much cash while inflation is high seems kind of crazy, right? It's literally losing value every single day. But it's actually a really powerful and contrarian bet. It means you're expecting a major market crash, and you're keeping your powder dry so you can go shopping for assets at bargain basement prices after everything collapses.
Which leaves us with this final thought. As geopolitical bluffs trigger chaos in the markets and force corporations into these radical new positions, maybe, just maybe, the most strategic move of all is to simply hold cash, step off the board entirely, and just wait. Thanks for watching.